Now, before we begin, I get it. Nobody wants to talk about crypto anymore. We hate this stuff, right? Like, let's just leave it be. This Bitcoin crypto shenanigan, that was last year's news. Let's move on. Forget it, right? That was trash and it's over. It's dead. Bitcoin's dead. Or is it? Now, if you recall, actually, I once said, when I stop talking about Bitcoin and crypto, then you will know it's time to buy. And I think that time may have come. I've personally seen a lot of capitulation, maybe you have too as well, in which people you know, your friends and family have just sold off all of their crypto holdings because they're just done with the space, they're disgusted by it. So the critics were right. Bitcoin crashed in price from its high of 66,000 to basically zero today. It's like worthless now. Right? It's worthless? No, it's actually not. It looks like it recently began going up again. It's at 21,000 now. It reached like 16,000 or something. And I mean, we're all standing around watching this thing that was supposed to die and it's not dead yet. And that's pretty weird. So here are my personal thoughts on this. Bitcoin is either dead or it's alive. It's not in between somewhere. It's kind of like the fountain of youth. Now imagine that the fountain of youth actually existed. It would either be worth like $1 million per fountain or it would be worth zero. It just doesn't work. But it's not like, hey, it's kind of there or not. It's either proven itself to be that cure-all miracle asset or it's not. And there's nothing really in between here. And so I think if Bitcoin starts going back up and if it doesn't go to zero, and actually with each passing day, it is proving its strength and resilience, then basically time is on its side. All it has to do is survive, growing stronger each day, show it cannot be hacked, and prove itself over time. And so now I think the situation is everybody's watching this thing out of the corner of their eyes on the sidelines, this fountain of youth. Now in the past year, FTX came along and sold a fake version of this fountain of youth water, and a lot of people got scammed from it and lost their money. And it wasn't real, but that the real fountain of youth is still there. It's still on the blockchain. It's never been hacked. It's been the same technology for years. Bitcoin is still there. It's just that people didn't get what they thought they got. Now, in addition, some price analysts are predicting Bitcoin to hit $50,000 to $100,000 per coin in just 2 to 3 years, which is going to coincide with the next Bitcoin halving in March of 2024. So the Bitcoin halving happens once every 4 years, doubling the difficulty of the blockchain network, which essentially cuts down the rate at which new coins are created by half, lowering the available amount of new supply even as the demand remains the same or even increases. And so usually during Bitcoin halvings, we see a rally. Quick pause. This video is brought to you by myself, DeFiPro.dev. This is a new online course and community for decentralized finance. Decentralized finance is passive income, and I'm excited to share all of my learnings and experience with you in here. There'll be a link in the description below, DeFiPro.dev. Check it out. And so my prediction is when or if this bull market ever comes back, I think the price movement will be so fast because everybody's still watching this asset class out of the corner of their eye. The whole world knows about it, and it is one of the only digital assets that is truly global in nature. It's not like a stock where only a few people in the country might want a country national stock, or it's not like real estate where only people in the local area want it. This is an asset class the whole world knows about and wants. So it's truly unique because it has the power to go viral on a global scale, leveraging social media, whereas other assets like say commodities, agriculture, oil, coffee beans, or real estate, that stuff doesn't really go viral. It's just a pretty boring asset class. People don't make YouTube videos or Twitter accounts about that stuff. And I believe if Bitcoin comes back, it will come back stronger than ever before because as I said, there's no in between here. It either proves itself or it doesn't. And we can see here a descending triangle here, which is possibly a bullish pattern for a reversal in trend here. Now, on the technological front, there have been some interesting developments. BTC.B is now actually larger than the Lightning Network Bitcoin capacity, which is about 5,000 BTC. So BTC.B, if you're not aware, it is the bridge to Bitcoin on Avalanche network. So you can actually use Bitcoin on Avalanche. And this is a native all-code bridge, non-custodial. So it's not like those wrapped tokens, like say wrapped Bitcoins, where you have to trust some random organization to back all of the tokens. This is on-chain. And so BTC.B parallels the Lightning Network in a sense, making Bitcoin much more usable in daily life. You can use it for small transactions, purchases if you want, leveraging all of the scalability of the Avalanche infrastructure. And I think over time, we're going to see more native bridges like this, making Bitcoin not just a store of wealth that is kind of a slow-moving asset, but also usable in daily transactions as well. Meanwhile, on the Ethereum side, we're actually seeing Ethereum. I don't think this is necessarily good. They say that the Shanghai upgrade remains on track for March. March. And so this is going to actually release all of the staked ETH, unlocking a lot of the staked Ethereum, essentially flooding the market with a lot of Ethereum, possibly creating downward sell pressure for Ethereum as an asset class. And I guess this brings me to one reason why I'm personally more bullish for Bitcoin rather than Ethereum is because when you take a look at Ethereum, a lot of the tokens on there, the wrap tokens, stablecoins, wrap Bitcoins, Tether, you've got Paxos tokens, Binance USD, all of those are not actually on chain. So you still have to depend on the issuer of those stablecoins, these random organizations to back you up. And in that sense, it is antithetical to the idea of blockchain technology in and of itself. The only thing that's actually on chain is Ethereum as a gas token. So it boils down to it being a transactional layer. And I just think there's better transactional layers these days, faster, cheaper, more scalable, like Avalanche, Polygon, Arbitrum, so forth. Now, let's take a look at other asset classes that you may be considering as well, like stocks, real estate, cash. Okay, now stocks is a big one. Everybody's still going back into stocks. I believe that stocks may be in for a recession and they may never come back, actually, quite frankly, because of a change in policy. And that is, we're moving towards more of a closed world, becoming more competitive rather than cooperative with other countries. The Economist summarized this as a zero-sum game of globalization, in which we have this new logic. America is leading a global slide towards subsidies, export controls, and protectionism. So it's like this. In the past, we had all these global tech companies, right? Google, Apple, Facebook, Amazon, Tesla. They became these massive global companies and they grew their revenues that way. But what if I were to tell you that now we're entering an age of protectionism where you don't have global tech companies anymore? The maximum scale is just going to be national companies. So imagine that Apple products are only just limited to the US. Facebook is banned in every country, Google's banned in every country. And this is the world we're entering where every country is starting to guard their digital technological borders. The Economist notes, mutual benefit is out, national gain is in. An era of zero-sum thinking has begun. And so we've seen various sanctions and export controls on semiconductor chips with the CHIPS Act. We saw Apple forced to move a lot of their manufacturing back into the US. This is going to have costs associated. And Tesla plant expansion in China is now in doubt as China has begun banning use of Teslas in government agencies. And with all the geopolitical conflict with Russia, China, I think it just limits that global scale that these tech companies once have, severely limiting and restricting the amount of revenue they'll be able to generate. So I think there is a bear case for stocks where we could be entering a multi-year recession. Stock values just could be continuing to go down as we enter an age of protectionism where companies are limited from global expansion. If you remember anything about the prior crashes, then there was a period of time where people were deathly afraid of stocks. So it's kind of funny how these days everybody's afraid to touch crypto. There are moments in history where everybody's also similarly afraid to touch stocks as well, and people just throw everything into cash or the real estate. Now, talking about cash, we got a pretty nice interest rate coming in here, but you have to remember when everybody's got their assets stored in cash trying to earn like 4% interest rate or whatever it is, I mean, this money isn't free. It could be that the US is just printing a bunch of cash to pay you interest on that, kind of like what Terra Luna did with their 20% yield. But if we take a look here, Saudi Arabia is now open to discussing non-dollar oil trade settlements. So this news just came out yesterday. The Saudi Minister of Finance said, I don't think we are waving away or ruling out any discussion that will help improve the trade around the world. They've been talking with China a lot. Xi Jinping pledged to ramp up efforts to promote the use of yuan in energy deals. So if the US dollar were to lose world reserve status, maybe slowly over time, then all of the interest that you're earning isn't going to be worth as much as you think. Now, real estate may be good as an asset class. Personally, it's not something I'm super interested in because I don't want to manage a house. I think it's a lot of work. And I think just for the younger generation, we've got travel nowadays. It's easy and cheap to travel. In the older times, people just bought a little box for themselves, a house, and just sat in that their whole entire lives. And then there's gold and other precious metals. But every time I think about this barbaric relic, it's easy to counterfeit. You can't really verify if it's real. It's hard to transfer, hard to transact with. Sometimes you still have to trust the other party who says that they have the gold assets that they say they have on paper. But how do you verify that? Whereas compared to Bitcoin, it's just all on-chain, immediate settlement. And so for those reasons, I think that makes Bitcoin a truly unique and arguably a theoretically perfect digital asset class. And that's the bull case for Bitcoin. But let me know, what are your thoughts on Bitcoin in 2023? Will it go up or down or sideways? See you in the comments below. And if you liked the video, give a like and subscribe. See you in the next one. Thanks. Bye.